Welcome to Simplified Profits, ladies and gentlemen. This is Anthony with over 23 years of experience in the market. We're going to do a real quick rundown on the charts, just looking at the basic ETFs of some of the major indices. And then we'll do a quick look at some scans, some oversold bullish in the S&P 100. We may actually, let's just flip this to the S&P 500 because there's not much really out there. 65 items out of 65 companies out of 500. Considering the S&P 500 is overbought, I usually wouldn't even buy a single company that's oversold and bullish when the market's overbought, because if the market pulls back, it can really, drag that company down further with it. So usually when I'm looking at single stocks, if I wanted to add a single stock, I'm looking when the market's oversold. So for instance, our last video, we talked about if you would have seen the S&P 500 when it was at this bottom wick, right around that 50-day moving average, that was actually close to 20, the stochastics, and that's when we entered, and we really traded that run up right there. Now, there's not been that many swings this year compared to most years, so we kind of went into shorter time frames. But real quick, let's take a look at the market. As you can see, S&P 500 didn't even really hit oversold, even though that at that wick it was, but that day closed up and kind of snatched that up real quick. So it's at all-time highs. Well, right around it, hit an all-time high right there. If you look at the weekly, I mean, market looks strong, ladies and gentlemen, but expect some volatility coming up. We got a lot of, Fed stuff coming out next week, so it'll be a pretty active week. Monthly chart looks strong. I think we said in our last video, you see this running up to 550. And we may see that next week. We may see a pullback first. Nobody really knows. The best thing you can do is try to read the charts. Now it's overbought, and looking at the hourly chart, I would like to see a pullback to the oversold on the hourly at least. 15-minute. That's what I mean. We've been kind of looking at these shorter time frames, everything from 3 minute to 1 minute. So those started breaking down on Friday. As you can see, they were looking bullish and trending up. You could easily trade the pullbacks on those, but the highs started getting lower and the lows started getting lower, but kind of held up right there. So we'll see what Monday brings. Like I said, I'm a swing trader. Swing traders want to see swings. So I'd like to see the entire market pull back to the oversold territory. But if not, we'll pay attention to the hourly chart, and then we'll look at some of the shorter time frames for a bounce on that, or if it's going to continue to kind of drag down and pull that daily chart down. Now Dow Jones, it attempted to rally. It literally hit oversold. Let's see, if you would have got a new Dow on that, you've been up. If you would have bought at that oversold condition on the bottom Bollinger Band, you'd still be up 5% in a couple days. That's a good swing trade, ladies and gentlemen. I mean, compound interest is a beautiful thing. You keep compounding that. But I don't know if that looked like a weak sell-off right there at that 20-day. Well, I'm going to say a weak sell-off. I'm going to say basically the chart looked weak once it hit that 20-day. 20 days, that line in the middle of the Bollinger Bands. It's your 20-day moving average. And it kind of stuck in between that 20 and 50 right now. I want to say it's probably going to pull back, but like I said, nobody really knows. But seeing that sell, that wick right there, it's not a good look. If I'm a betting man, I'm going to say Dow Jones might actually pull back, blow through that 50, and retest that 200-day moving average. I mean, there's not much to be too excited about in the market right now, besides the fact that people's always going to put money to work, and people's always going to be trying to make money in the market. Small caps, really close to oversold. That's something. I mean, especially in this rate environment, I would stay away from. I know people say it's coming back, but cannabis ETF passed under the 200 days, so we'd be out on that until it starts trending back over. Triple Qs, you'll see triple Qs and S&P 500. Same with semiconductors. The charts are looking about the same, and that's because the S&P 500 has a decent amount of technology stocks in there, especially NVIDIA, compared to what it used to. I mean, it didn't used to be this tech heavy, but I wouldn't mind seeing that pull back as well. I mean, right at all-time highs. Silver had its weird little bounce and then another pullback. Semiconductors, all these things are sitting at all-time highs, ladies and gentlemen, just really close to them. Coming into, some Fed, and anytime the Fed talks, things get up and down. So just be ready for some volatility next week. Oil dropped under the 200-day, definitely a bearish sign for oil. I thought it might have held the 200-day and kind of rallied back up with everything going on around the world, but looks like we are under that 200-day again. Now here, it may just stay for a short amount of time like this and rally back up, but anything under the 200-day moving average, we do not touch. And let's look at it. I'm really surprised biotech is holding up, which, don't get me wrong, it's still down a lot from back in 2021, but you still got a possible head and shoulder pattern right there if that breaks down and crosses under that 200-day, especially if rates are going to be here for a longer amount of time. You could see pretty big pullback. Oil and gas production companies, I mean, it's really testing that 200-day moving average right now with oil dipping under it. Definitely a weak look for it. Let's take a look at some scans real quick. So one stock I seen in here, just looking, XLY, we talked about that last video. It's a really bullish chart. Thought I seen NRG in here as well, which has been a really bullish. Yeah, right there it is. It's been a crazy stock chart. We've called this, really, I want to say back in October. Broke over the 200-day, and I mean, this thing is up 100% in 8 months since then. That's one reason you want to kind of pay attention to these videos, ladies and gentlemen. We go through some of these. Pay attention to the bullish looking stock charts where money's flowing. This is a utility company all about green energy, and it has been ripping. A lot of money flowing into that. So real quick, we got nothing. I mean, I don't like banks because they make money on you paying compound interest. They want you in debt. So I don't like investing in them. This chart looks nothing but sideways to me. Wouldn't touch it. There's another financial. We talked about this last week. A lot of finance companies right now, because they're killing you on the rates, are showing up in these bullish oversold stocks. There's American Express. Maybe a good opportunity. Just nothing I like. I mean, if you check this out, when they come over the 200-day moving average and start swinging, they definitely got a potential run back up to some previous highs. That's when you'll see most of the gains in the stock. Definitely not, a guarantee, but you'd have to look into the company. But I mean, this maybe retrace 50% or so in the next year. So check it out. Utility companies may be coming back. Just pay attention. Check the fundamentals, stuff like that. Seeing a lot of financial companies in there. Industrials, Dove Corp. It's a decent looking stock chart on a pullback. May be a good buying opportunity. I mean, you got, is it worth the risk for a possible 6% upside? But that thing could keep running. Just, do your research. This is not investment advice. This is just us looking at some stock scans, ladies and gentlemen. Crossed over the 200-day and holding. Another industrial ETF. Don't really know much about that company, but could make some ground up, retrace a good, geez. That thing's lost some ground since it crossed under the 200-day. And that's why I say, ladies and gentlemen, some crosses under the 200-day moving average, you're going to see that's when your biggest drops occur. Your biggest losses, 70% in 2 years. Dead money. If somebody put 10K in that, I mean, look at that stock chart. If you would have got in over the 200-day, you crushed it. If somebody put 10K in right around here and just been holding, that's down to about 3. Definitely sorry for your losses, but now may be a good time to start building a position in that. Wells Fargo, I believe that was up last week is on our scans. It looks like it's pulled back a little bit since then. So if you bought that time, it'd be time to scale into that position and kind of keep your average low. Looks like industrials and banks are kind of what's coming up sector wise, and some utilities. Yeah, AES. I mean, some of these utilities, what does XLU look like? So XLU's kind of busted up a little bit over that 200-day, and it may hold. You may want to pick out some single stocks or jump in something like UTSL, which is the leverage version. A lot of opportunities out there as far as that goes. Dow, basic chemical company. Kind of been sideways. Morgan Stanley. I almost bought calls in that on Friday, honestly. Almost bought some like $96 calls out a few months. Feel like that'll definitely bounce back up. Might be something I look at on Monday. And check that out. Oh, this is another company we've covered multiple times. This is green. This is a green energy company that we've been, I want to say, have a position in. I've been saying to buy for the last 5 months because the trend has been bullish as crap, and it has ripped like crazy. There's another one for you. I mean, these are definitely some of my favorite pullbacks right there. Same with NRG. And ladies and gentlemen, XYL. Strong looking stock chart. I'm not going to click through all 65 of these. We're on number 28 now, but I'm scrolling down, so just take a look. Waste management right there, but that's look like that could be building the top more than anything. Let's see, West Stock. It's a nice looking chart right there, ladies and gentlemen. I mean, that thing's gapped up, pulled back. Keep your eyes on that. I'll keep scrolling down for you. Kellogg there, American Power, Exxon, which I don't like that trend. It's not a good look. And that is it, ladies and gentlemen. Take a screenshot, but hope everybody makes some money next week. Market is a great place to put your money to work and build some compound interest. Just do it wisely. If you're losing money, just stop what you're doing. Educate yourself. Last thing you want to do is compound losses instead of compound profits. I'm out.